So, here's a series of sessions where we'll be talking about the basics of accounting. So, if you are someone who is starting off any professional qualification, or if you are someone who wants to learn the basics of accounting, then you are at the right place. Because in this series, we are going to cover the basics of accounting if you're starting from zero. If you know nothing about accounting, we are going to teach you in this particular session. So stick around, it's going to be a series of sessions. Make sure that you have clarity over it. I have seen it with many professionals going forward, doing many professional qualifications, or who are actually working right now. What do they lack is they lack on their basics. So if you're someone who is actually coming back after a professional qualification also, or want to brush up on your basics, then this is a session or this series of sessions is something which you guys need to follow up with. So here we go. What are the financial statements? So financial statements gives us the complete picture of what exactly is an organization doing. Okay, what exactly are their assets, liabilities, incomes, spends, expenses. Their assets is something which is the article which they have, which they use it in the business, whereas liabilities is something which they owe to someone, and that is something which they have to give it outside. Income is the regular income which they get it from sales or their normal operations. And expenses are their spends which they spend it in their normal operations of business. Now, why do we make financial statements? Okay, to know how the business is ongoing right now. For that reason, we are making these financial statements so that we have clarity about what exactly is happening in the business. Now, when we have clarity about whether we are making profits or losses, whether we are growing or declining, or whether we have to pay more bills outside, or how much people owe us, we need clarity about what's exactly happening in business. In addition to that, once we have clarity about our business, that will help us make decisions in business. So, if you are someone who wants to grow your business and understand that how can we expand or how can we reduce more cost, and also how can we hire more people or should we hire more people, that can be understood by financial statements. Understanding whether we are growing or not, understanding we have bills to pay or not, that gives us clarity. Now, do we need loans or do we need investments? How will are you going to know? That again is possible when you have prepared proper financial statements. And also, there are a lot of compliances which we need to go through as business owners. Keep those compliances as business owners or big companies. They want to know whether you're following the law, whether you're paying the taxes on time, whether you're showing accurate records of income. Now, when I say accurate, it's a very tough term, but we go on with the true and fair view. Accurate means exact, which does not have any error, but there is possibility that accounting may have errors. There can be errors of not understanding a concept, there can be errors of omission, or there can be errors of a mistake. So what we need to do is keep that also intact and say that this is not something which is going to be completely accurate, but what we can say that as per our knowledge, what's true and fair. To move forward, how do we calculate taxes? Taxes are again calculated based on the income and the profits which we have. And how are we going to do that? We are going to do that based on our financial statements, because we are not taxed directly on whatever we earn. We have some allowable expenses as well. There would be some expenditures which will reduce the taxable income which we have. Now, who are the users of financial statement? The users are the owners, shareholders, banks, lenders, managers. Now, what all they have? They have their own interest. The owners and shareholders have their own interest. Banks, lenders, they have their own interest, whether should we give them money or not? Do they have the capacity to pay us back or not? Then we have managers of our current business so that they get to know whether we are growing in the business or not. We have government authorities, tax authorities to understand are we following the rules and regulations or not. And then investors, analysts, employees, public media, everyone has their own interest in knowing the financial statements of the company. It can be public at large, it can be students who want to research about a company. They would also want to go through the financial statements of the company. To summarize it, Financial statements are the report card of a business. They help everyone from the owner to the investor make informed decisions with clarity and confidence. So here you go. Here's our final thought on it. Financial statements are pretty important for businesses. They should be making it on a regular basis. Who uses them? It's technically everyone uses it based on their interest. They use these financial statements. They make decisions for business. So that's what it is with what financial statements are. This is just a generic thing. What we are going to do is we are going to move on towards the next lessons and understand these things in detail, because accounting, accounting things, this is not something which we just theoretically learn it. We do it hands on. So what you guys need to do, have a pen, paper, also have a calculator with you. We are not going to jump into some big calculations right now, but what I suggest is have a calculator, have a book, pen, do it hands on with me.